Okay, let's dive into this. A major military operation unfolds halfway across the world, and then suddenly the stock market right here in India starts to tremble. How does that even happen? Today, we're going to unpack this major global event and trace its surprising shockwaves all the way to the Indian economy. So, it all kicked off on January 3rd, 2026. The world was absolutely jolted by news of a major U.S. military operation in Caracas, Venezuela. The mission, which was codenamed Absolute Resolve, ended with the pretty dramatic capture of President Nicolás Maduro and the First Lady. Now, I know what you're thinking. This seems like a really distant crisis, right? An event happening thousands and thousands of miles away in South America. And yet, back here in India, the markets immediately felt a tremor, which raises a huge question for investors and policymakers alike. Why? So to really understand the why, we first need to get a super clear picture of the what. Let's break down this geopolitical shockwave itself. This wasn't just some minor intervention. Operation Absolute Resolve came with a jaw-dropping announcement. The U.S. planned to put Venezuela, a nation with the world's largest proven oil reserves, under temporary American control. A move like that fundamentally redraws the geopolitical map. An event this big doesn't just stay within one country's borders, right? The financial markets, well, they're always the first to feel the aftershocks. So let's see precisely how the Indian markets reacted to this sudden blast of global uncertainty. Okay, so check this out. It's Monday, January 5th. The markets had actually been hitting record highs, and then, boom, they completely reversed course. Both the Sensex and the Nifty fell. The decline was really led by the heavyweights, sectors like IT, which has a ton of U.S. exposure, and banking, as investors just started pulling back from risk. Now, here's where the story gets really, really interesting. Look at this divergence. As fears of a wider conflict started to rise, investors piled into defense stocks like Bharat Electronics, probably thinking military budgets were about to get bigger. But on the flip side, upstream oil companies like ONGC took a hit, falling right in line with uncertain global crude prices. That dip in oil stocks brings us to the most obvious question, doesn't it? Is India's energy security at risk? If a major oil nation is in turmoil, should we be worried about our supply? Well, the answer, surprisingly, is no. Let's just look at the data for a sec. In the 2023-24 financial year, India imported about $1.4 billion worth of crude from Venezuela. A year later, wow, that number plummeted to just over $255 million. That is a staggering drop of more than 81% in just 1 year. In fact, to put that in perspective, Venezuelan oil now makes up less than 0.3% of India's entire oil import basket. It's a tiny, almost negligible fraction. So the crucial point here is that this shows a major strategic shift in India's energy policy, a deliberate move over several years to de-risk from volatile regions. It makes a direct supply shock pretty minimal. But why that dramatic drop? Well, this didn't just happen overnight. India had already been pivoting away from Venezuelan crude for years. Starting way back in 2019, Indian refiners began to significantly scale back their business there, all to comply with existing U.S. sanctions and avoid any penalties. Okay, so if the immediate threat is low, what's the bigger picture for India? This is where the crisis shifts from a risk we have to manage into a really complex set of strategic considerations, and maybe even some potential opportunities. First things first, there's the money. India's state-owned energy giant ONGC Videsh has about $1 billion in stalled dues and dividends just locked up in its assets from projects in Venezuela's famous Orinoco oil belt. A new, more investor-friendly administration in Caracas, maybe one guided by the U.S., could finally open the door for India to recover that $1 billion. And it could even create a path to restart stalled production and tap into the world's single largest oil reserves. This whole episode really forces us to zoom out and look at a much bigger picture, how India is learning to navigate an increasingly turbulent and competitive world. As the think tank GTRI points out here, the key takeaway for India is the absolute necessity for what's called strategic autonomy. That basically means having the ability to secure its own critical resources, like energy and raw materials, without getting caught in the crossfire of great power politics. The Venezuela situation is really a perfect case study. It's like a live fire drill for navigating a world where, as GTRI warns, wars for raw materials are probably going to intensify. And that leaves us with a critical question for the future, especially as India pursues its goal of becoming a developed nation by 2047. That question of economic independence is one we'll all be watching very closely in the years to come. If you found this breakdown helpful, please do us a solid and like, share, and subscribe for more deep dives into the stories shaping our world. We'd love to hear your thoughts in the comments below. Thanks for watching.